What is going on, you guys, and welcome back to the channel. If you're new here, my name is Brandon. In this video, we got two dividend stocks to share with you guys. These both pay very attractive dividends up in the 5% range. They are also monthly dividend payers, and I have a Canadian selection, as I know you love those. I also have an American one. We'll get into all that today. Reminder, if you are a beginner investor here in Canada and you are in the market for courses and training, click the link below to check out our investing academy. But let's dive in with stock number one. It is A&W Royalties Income Fund. The ticker is AW-UN.TO, today paying the 5.18% dividend. And yes, this is the A&W that you're thinking, the one we're all familiar with. Absolute staple in the Canadian fast food space. This fund operates on a royalty structure, so a bit different than what you may be used to with various other fast food companies. Up on the screen, essentially, this is how it works. They take a 3% cut of top line revenue, gross revenue, what all these locations all over Canada make. They pay their expenses, taxes, yada, 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 and the rest pretty much gets distributed to shareholders. We'll dive into that in just a second. I think that this is a unique and fascinating business model because the fund itself doesn't incur the risk and the costs of operating all these locations. That's on the franchisee, if you will. They essentially have this winning formula that just gets passed through, and they're charging more or less for the right to operate as an A&W, a chain, or the trademark, if you will. Curious to hear before we dive any further. Leave a comment down below with what your favorite burger is from A&W. For me, it is hands down the matzo burger. I love the sauce in there. I get matzo burger, extra matzo sauce. I do like the buddy burgers as well. I know my grandpa, who no longer with us, but when he was alive, he went daily to A&W, like every morning, to get a bacon and egger and coffee and sit around with, his older friends and whatnot. I know that's a very popular hangout spot amongst the older folk, it seems, and rightfully so. I mean, A&W, as we'll see in a second, has a very long history and a very good place to hang out. Nevertheless, I am curious to know down below what you guys like. In terms of some actual up-to-date numbers, more importantly, they have over 1,000 locations across Canada. And of these 1,000+ locations, only 10 of them are exempt from this royalty structure, and those are because they are corporately operated locations, excuse me. They've pretty much recovered entirely from the COVID shutdowns, and all locations are in full-fledged operation mode, which is important. This led in the recent quarter to a 4% increase in same-store sales growth. This brings the yearly growth number up to about 9%. They added 34 new locations to this pool, and that generated approximately $1.19 billion in revenue for this fund. This is about $27 million in distributable cash after their costs and expenses and whatnot. What you'll notice with this fund, and it may jump out to some of you guys, is that pretty much all of this distributable earnings gets passed through to us. There's a 98% payout ratio. For a lot of companies, a metric this high would be an indication to possibly stay away from, like a red flag. Hey, they're paying out so much of their earnings. Not with a stock or a fund, I should say, like this. The goal with A&W Royalty Company here is to spin off all of the income. Like, its goal is to operate with a very high payout ratio in the high 90s, essentially paying out all of the income back to shareholders. A risk that we did see, which was prevalent during COVID when all of these stores closed down and there was very little traction to the A&W locations. Well, this absolutely hurt their numbers, and it absolutely hurt the dividend. They got crushed. That was, a couple years ago, and good thing is that this is behind us now. They've been slowly and steadily increasing the dividend. Over the past year, they've bumped that up to where today it sits at 16 cents distribution per month, which is again an over 5% yield today. And as I mentioned, this is a monthly payer. At the end of the day, this is a very simple business model to understand, and it's one of those cases, in my opinion, of if it ain't broke, don't fix it. Just let it do its thing. A&W has been around for eons, a long history. They make some of the best root beer out there, and it's a simple case of, as the number of stores increase, and that grows with time, absolutely their revenue, their cut increases. I think it is a great solution for income investors. Today trading at $37.03. Not to mention, it is just a fun stock to own. It's fun to own a stock like A&W, in my opinion. It's like a cool little highlight in your portfolio, and then, you get a great income along the way. Moving along into stock number two, we're jumping over to the New York Stock Exchange. It is the company Realty Income, ticker O. This one pays today a 4.7% yield. This stock I actually just added this morning. So prior to filming this video, I added this to my RSP. in which I just had some cash from my contribution this year. Nevertheless, this is one of my favorite, if not my favorite, American REIT. And you guys know I'm not a huge fan of REITs, so that is saying something. They own over 12,000 plus commercial locations, with 3/4 of that coming from these low-cost retail clients, which I think is actually very important. This is one of my favorite charts to look at. It's basically their client list or tenant list, if you will. And what you'll notice on here, dollar stores, pharmacies, convenient, like 7-Eleven type things. These high quality tenants are very, very important because you don't really have to worry about, you obviously do have to worry about it, but in general, you don't worry about a company like 7-Eleven going bust or one of your big pharmacies in all types of economic periods. And that's obviously very important because this is who pays their rent. This is how they generate money at the end of the day. This fund, in my opinion, is structured for long-term success, a great hold in the portfolio. By nature, one of the things I really like as well is the leases they do. A typical lease would be in the range of 10 years, sometimes more than that, where you don't have to worry about these tenants turning over and whatnot. You're just looking at high quality payers that are just going to pay you every single, pay their rent every month, pay their lease every year. Very, very solid. In terms of the dividend, this chart really does say it all. You got 119 dividend increases since 1994, 101 consecutive quarters of increases, 632 months of dividends paid. That's 54 years. And a minor one that we don't want to overlook on this chart is the 4.4% compound annual growth rate. So it is absolutely growing. This is annual dividends of about $3 per share. This is USD FYI. 25 cents per quarter, and as mentioned, that's a 4.7% yield today. This one I'll keep short and sweet for you guys. We've covered Realty in the past a couple times, not too commonly, but it is one of our all-time favorites. It's a great long-term hold, and hey, like I said, I bought the stock this morning. But as always, make sure you do your own research and your own due diligence on these various investments. I'd love to hear what you guys think down in the comment section below. Do you like them? Do you dislike them? Do you own them? Leave a comment down below and let me know. If you enjoyed the video, give this video a big thumbs up. Make sure you are subscribed. And again, as always, take a moment and check out the Investing Academy. If you are in the market for course and training, this is a program built specifically for Canadians who are new to the market and they want to know step by step exactly what to do in the DIY space so that they can manage their money effectively, build a good portfolio from the ground up. Even if you're coming in with zero knowledge, we're working with people all across the country every single day. That's that first link down below. But as always, I thank you guys for watching. I hope you enjoyed, and I'll see you in the next video.